Hello friends, I CA Pratik Neve welcome all of you to this session of amendments for AY 26-27 which is applicable in your upcoming exams which happen in the calendar year 2026. Getting it? Yes, absolutely. So these amendments will be very useful for you and you don't have to take much tension. Sir, we have done AY 25-26. Now, how to give our upcoming exams? There are two amendments in AY 26-27. If that is your problem, no issues, friends. Watch this session till the end, and I'm quite sure that you will be very comfortable because each and every amendment, okay, we will explain you in detail. Not only that, we will go ahead and solve example on that. So we will divide this video in two parts. In first part of the video, in about 20 to 25 minutes, we will go through all the important amendments for AY 26-27, that is friends PY 25-26. Okay, so these are the amendments made by Finance Act 2025, means not the latest budget, friends. Latest budget will be Finance Act 2026, but we are talking about Finance Act 2025 because those things will be applicable in your upcoming exams. Okay, so let us start. So friends, first of all, rates of income tax. So first thing, let me clarify to you that Income Tax Act 1961 itself will be applicable to you. Okay, so rates of income tax under 115 BAC. What are they? That is in default tax regime. You all know that many deductions are not allowed in default tax regime. So yes, without allowing those deductions, whatever income you get, okay, and after taking standard deduction in salary of rupees 75,000, okay, and family pensions deduction, and all, you know how to calculate total income under section 115 BAC. On that total income, what slabs will you apply? So especially I'm bothered with individual. Okay, mostly in my exam I'm bothered with individual. Yes, so for individual, HUF, association of person, body of individual, and artificial juridical person, what are the slabs? So friends, up to rupees 4 lakhs there is no tax. 4 lakh to 8 lakh income there is tax of 5%. 8 lakh to 12 lakh 10%, 12 lakh to 16 lakh 15%, 16 lakh to 20 lakh 20%, 20 lakh to 24 lakh 25%, and above 24 lakhs tax will be at 30%. So very simple way to remember this: income range is increasing by 4 lakhs. See, 0 to 4, 4 to 8, 8 to 12, 12 to 16, 16 to 20, 20 to 24, and above 24. Getting it? So friends, it becomes no tax. See, 0, 5, 10, 15, 20, 25, 30. Isn't it very simple? Okay, fantastic. We will of course solve example also on this, but as I told you, in the next segment of this video or in a separate video, we will do examples. Okay, so that there are some students who just want to know the amendments, so this video will be helpful for them. And those who want to know exactly how to apply those amendments, for them the next video will be important. So follow both the videos, keep this channel subscribed, hit the bell icon so that you don't miss out on any important videos. Okay, so go ahead. Rebate under 87A, when this rebate will be applicable? So rebate will be applicable if the total income is not exceeding 12 lakh rupees. Getting it? Yes sir, absolutely. So earlier this limit was something else. So I will not take the old figures because anyways you have to unlearn them. So this rebate of 87A for 115 BAC is applicable when total income is not exceeding 12 lakh It is applicable, mind you, for resident individual only. What is the rebate amount? It is 100% of the tax payable or rupees 60,000, whichever is less. Okay. So again, keeping the example pending for the next session where we are going to do it in detail. Yes, go ahead. Then, of course, marginal relief is available in case of rebate. So even that example we are keeping for next session. Okay, go ahead. Surcharge on tax. Surcharge on tax continue as it was. So here we are discussing for section 115 BAC. When income of individual is between 50 lakhs to 1 CR. So 50 lakhs to 1 CR, if that's your income, then surcharge will be at 10% of the tax. If your income is between 1 crore to 2 crore, then it is going to be at 15% of tax. And if your income exceeds 2 crore, it is going to be 25% of tax. Clear? So that's your surcharge. No change here. Okay. And where the total income includes dividend or income which is chargeable under 111A, means short term capital gains on sale of equity shares, or 112 means any type of long term capital gains, or 112A means long term capital gains on transfer of equity shares which are listed, then the surcharge cannot exceed 15%. The surcharge on that income, surcharge on income tax on that part of income, means these three incomes, it cannot exceed how much? It cannot exceed 15%. Okay. So let's go ahead now. Now, if you are going to opt out of default tax regime, that means if you are going to opt out of section 115 BAC, then what are the rate of tax for you? So they are remaining absolutely same. Okay, so in short, you can call it as old regime. So here, rate of income tax is same as was applicable in last AY. So what it is? The basic exemption limits I am telling you. If you are resident super senior citizen, then it is 5 lakh rupees. If you are resident senior citizen, then it is 3 lakh. And for any other individual, let he be resident or non-resident, it is rupees 2 lakh 50,000. Making sense? Now friends, who is senior citizen whose age is 60 or more than 60 in the PY, and who is resident super senior citizen, one whose age is 80 or more than 80 in the PY. What are the slabs here? So up to, of course, basic exemption limit, there is no tax payable. When the income is between basic exemption limit to 5 lakh rupees, tax is at 5%. Okay, so basically, if you are not a senior citizen, then 2.5 lakhs to 5 lakhs, tax is at 5%. If you are resident senior citizen, then 3 lakh to 5 lakh, tax is at 5%. If you are super senior citizen, then on first 5 lakhs, there will be no tax. Then 5 lakh to 10 lakh, whatever income falls in this, tax is at, as you all know, 20%. And above 10 lakhs, tax is at 30%. Then going to rebate under section 87A, when you are out of 115 BAC. So here, even that rebate, that discount of tax is allowed if your total income is not exceeding 5 lakh. So here, the limit is 5 lakh rupees. Okay, if your income exceeds 5 lakh, then rebate is not allowed if you are paying tax by opting out of 115 BAC. Again, reminding you, if you are in 115 BAC, then for applicability of rebate, the huge amount is there, that is rupees 12 lakh. In short, if you have income up to rupees 12 lakh, you will not end up paying any tax as per 115 BAC. Okay, so again, example is pending for the next part of the session. So 1, 2, 3, 4 examples we have kept pending. So let's number it: 1, 2, 3, and 4. So that surely you watch the next part of it. Go ahead. Then for partnership firm or LLP, you know the tax rate is 30%. It continues. Surcharge will be applicable for them when their total income exceeds rupees 1 crore. Okay. And in case of company, if we talk about domestic company, the income tax will be at 25% if their turnover in last to last financial year, that means in FY, see, we are calculating tax for 25-26. So last year is 24-25 and last to last year is 23-24. So if in 23-24 the turnover of the company is not exceeding 400 crores, then the rate of tax is 25%. Friends, if it is exceeding 400 crores, then tax is at 30%. It's turnover criteria and turnover of last to last financial year. Okay, if it is reasonable, if it is within 400 crores, then concessional rate of tax is there, that is 25%, otherwise 30%. Then for foreign company, the rate of tax is 35%. Talking about surcharge in case of companies, just focus on domestic company. Surcharge will be at 7% if the turnover, not turnover, total income exceeds 1 CR but does not exceed 10 CR. But if it exceeds 10 CR, it is at 12%. Clear? And just to remind you of surcharge in case of individuals who are out of 115 BAC, there is one more category. Yes, I hope you remember that category. So this is surcharge on tax when you are out of 115 BAC. What is one more category? See, 50 lakhs to 1 CR is your income. Surcharge is at 10%. 1 CR to 2 CR is your income. Surcharge is at 15%. 2 CR to 5 CR, when you're out of 115 BAC, then it is 25%. And when it is above 5 CR, then it is 37%. So this one more category of surcharge of 37% is added when you are out of 115 BAC. Clear? Let us go ahead, friends. So how many examples we have to solve? We have to solve 4 examples. This one will be 5th, 6th, 7th. So considerably lot of examples we have put up. Okay, going ahead, so you will tell me in the comments whether you want all these examples to be solved. If you want them to be solved by me, do you want spoon feeding of it step by step, or do you want only the final answers? Just let me know in the comments. Let's go ahead. Capital gains. In capital gains, one amendment in the sense every year, cost inflation index is defined. So this time's cost inflation index is 376. Okay. That is cost inflation index of PY 25-26. Lot of amendments, mind you, in the topic of tax deduction at source. Lot of amendments in TDS. Ready? All of you? Okay. In section 193, that is interest on securities, the threshold limit is 10,000 rupees per annum. Okay. It could be interest on debentures. It could be any other interest. Now the threshold limit is fixed at rupees 10,000 per annum per pay. This is first change in TDS. Second change, 194, section 194 is for payment of dividend. So when any company pays dividend, they will have to do TDS at 10%. But question is, what is the threshold limit? So here, earlier threshold limit was 5,000 rupees. Now it is 10,000 rupees. So say ITC, that is Indian Tobacco Company Limited, is paying you dividend, and during a financial year that dividend is exceeding rupees 10,000, then they will do TDS on that entire amount. Clear? Then very big amendment, very important amendment, 194A, that is interest other than interest on securities. So here, when there is any payer other than bank who is paying such interest, then friends, earlier threshold limit was 5,000 per annum. Now it is how much? Now it is 10,000 rupees per annum. And when bank is paying interest on any deposits like FDs, RDs, then earlier, whatever were the limits, forget it. Now the limits are, if it is paid to other than senior citizen, it is 50,000 rupees. If it is paid to senior citizen, it is exactly double. It is rupees 1 lakh. So, say particular bank is paying you interest on FD, and that interest on FD is exceeding 50,000, they will do TDS on the entire interest amount. Okay, and if you are a resident senior citizen, then this TDS will be required to be done if the amount of that interest during a FY exceeds rupees 1 lakh. Okay, so if I have to give the stars to the amendments in TDS, I'll give 3 stars to this particular amendment. Okay, so important one. Then insurance commission, earlier threshold limit was 15,000, now it is 20,000, and the rate of TDS is 2%. Earlier it was 5%. Commission on sale of lottery tickets, again the annual per pay threshold limit is 20,000. Okay, not so important. Then income of mutual fund or unit trust of India, that is UTI, threshold limit is 10,000 per annum per pay. Earlier this was 5,000. Okay, payment of commission, same threshold limit is increased to 20,000 rupees. Okay, so you can see relaxation done in the provisions of TDS. Here also earlier the limit was 15,000. So you can see for all commissions the limit has been increased from 15,000 rupees to 20,000. Then rent, very big amendment. I would give it 5 stars, my dear friends. I would give it 5 stars. Very critical amendment. For rent, earlier threshold limit was 2,40,000 per annum. Now that threshold limit is deleted, and it is replaced by what? 50,000 rupees per month. In short, if I am paying you rent for your immovable property or for your plant and machine, and if the monthly rent is exceeding rupees 50,000, then TDS will be done by me at 10% if it is for immovable property, at 2% if it is for plant and machine or any other equipment. Got it, all of you? So monthly threshold limit is introduced, and it is rupees 50,000 per month. Earlier it was annual threshold limit of rupees 2,40,000. Okay, then again I would give 5 stars to next one, 194J, payment of professional fees. Earlier the threshold limit was rupees 30,000 per annum for each nature of payment. Each nature of payment means professional fees, fees for technical services, royalty, professional fees, fees for technical services, royalty, non-compete fees. Each nature of payment had a threshold limit of rupees 30,000 per annum. So if the amount paid to particular pay of particular nature of payment was exceeding 30,000, TDS had to be done at 10%. But now that limit is 50,000 rupees. And of course, for directors remuneration there is no threshold limit, means whatever remuneration is paid to director there shall be TDS. Okay, very good. So lot of possibility of they asking you question on either 194A, 194I or 194J. Then 194LA, if you are getting compensation for compulsory acquisition of your immovable property, then if that compensation is 5 lakh or more, then TDS shall happen. Okay, and then there is one newly inserted section, that is 194T. This 194T is applicable when any remuneration, salary, bonus, commission, interest is paid by partnership firm to its partners. Okay, at that time, if this sum is exceeding rupees 20,000 in a financial year, then this firm will do TDS at the rate of 10%. They will do this TDS at the time of credit of this amount to the account of the partner, or at the time of actually making the payment, whichever is earlier. Okay, then let's go ahead. So I hope you will remember 194T as well. Then friends, I told you that 7 questions we will be doing, and add in that this one. Okay, so purposefully I'm going to take second session on this, so that all this amendment gets revised via these examples. Go to next one. In tax collection at source, if you remember, in TCS there are some amendments. Now what is TCS? Seller, while selling the goods, collects some tax from the buyer and then pays this tax to the government, and afterwards the buyer can take credit of this. Means buyer, whatever buyer's income tax is there, to pay that income tax he can use this TCS. Now earlier there was TCS applicable on sale of goods in section 206C1H, 206C1H. Now friends, that is deleted. Now there is no such TCS on sale of goods in excess of 50 lakhs. Okay, then TCS on timber or any forest produce not being tendu leaves obtained under forest lease, that TCS now is at 2%. Not so important. But according to me, what will become important from this exam perspective is this particular point in TCS. When dealer of motor vehicles is selling motor vehicle in excess of 10 lakh rupees, he has to collect tax at source at 1%. We had discussed it. Yes, sir. So I had given you example that a dealer of Kia Motors is selling a car for 15 lakhs. Then he does not collect from the buyer 15 lakh rupees, but he collects 15 lakh plus TCS of 1%. That is 15 lakh 15,000. That 15,000 he pays to the government, and then the buyer claims credit of that 15,000 in his income tax account. So it is as good as tax paid by buyer in advance to the government. So you know this concept. Now this concept is extended on various other items being sold by the dealer. Now this concept is applicable for lot of luxury items. So I told you, intention behind this provision is that government should collect information. Government wants to collect information. Who is buying the car? Who all buyers can afford the car in excess of 10 lakh rupees? So government says that sellers of these cars will give us TCS at 1% and the PAN number, that is permanent account number of those buyers. So automatically all information will be collected with government. So now they are extending these provisions from 22nd April 2025 to some other goods like wristwatches. Okay, not the normal wristwatches. Those wristwatches, the value of which is exceeding 10 lakh rupees. Like one fancy ones you must have seen, Hardik Pandya and all wearing the wristwatches. Those Patek Philips and expensive watches we are talking about. Then art piece such as antiques, paintings, sculptures, collectibles such as coin, stamp, yacht, rowing boat, canoe, helicopter, all these things, seller of these things should give TCS, should collect TCS at 1% from the buyer and remit it to the government and give information to the government that, see, government, these are the people who are buying such things. Okay, of course the price of this should be exceeding 10 lakhs. Pair of sunglasses, okay, handbag, purse, pair of shoes, sportswear and equipment such as golf kit, ski wear, home theater systems, and horse for horse racing in clubs and horse for polo. So basically, these 10 goods are added. Clear? Will you be able to recollect this? Yes. Friends, and now I will not take more than 5 minutes of yours. And we have already said that 8 questions we'll do in next session. We'll add to that this ninth question, and all these 9 questions we will do in detail in the next episode, or you can say next part of the amendment session. But next 5 minutes for what? Next 5 minutes for explaining with to you the concept of income tax return updated. So ITRU discussed in section 139(8)(a). What is this ITRU? If the due date of filing return is over, and also the due date of, or the last date of filing belated return or revised return is also over, so you have missed the chance to file the return, but it so happens that your tax liability is more, means you have declared tax liability of 10 lakhs, but now you realize your tax liability was not 10 lakhs, it was actually 15 lakhs. So now you want to increase the liability by 5 lakh rupees, but date is over of filing belated return also, of filing revised return also, but you want to voluntarily disclose more tax. So can you do that? Yes, you can do that by filing something called as income tax return updated. It is to be filed as per provisions of section 139(8)(a) of Income Tax Act. Okay. Now, for that, amendment is the time limit for filing that ITRU is now done 48 months from the end of relevant AY. For example, for AY 25-26, after the end of the AY 25-26 means 31st March 2026, from that calculate 48 months. So you can file it up to 31st March 2030. Okay. And what is changed is also additional income tax. So this facility government gives you not free of cost. Okay, they tell you that okay, your tax you have paid is 10 lakh, but actually the tax that you should have paid is 15 lakhs. So okay, pay that 5 lakh extra tax, but on that, of course, pay the interest also. Now, whatever is the tax plus interest, on that you calculate some additional income tax and pay tax, interest plus additional income tax. Okay, then only you can file ITRU. Now, how much is that additional income tax payable? If you are filing ITRU within 12 months from the end of the AY, then it is 25% of the total of tax and interest. But if you are filing within between 12 months to 24 months, then it is 50%. If you are filing between 24 months to 36 months, then 60%. And if you are filing between 36 months to 48 months, then it is 70%. Clear, friends? So these are all the important amendments as made in Income Tax Act 1961 by Finance Act 2025. Mind you, the budget which took place in Feb 2025. That budget, because it is applicable for all the exams, okay, which will happen in this calendar year of 2026. So I hope I have clarified everything for you. And please stay tuned to the next part of this video, in which we will discuss and solve all the 9 questions, all the 9 examples, okay, which are here in this particular, you can say, PDF. So thank you so much, friends, for being such wonderful audience. I'll see you in the next session. Till then, keep smiling, keep studying, and stay blessed. Your tax mentor, CA Pratik Neve, signing off for this session. Please don't forget to subscribe to the channel and hit the bell icon so that you don't miss out on any important videos. Thank you. Bye-bye.